So if you make 100 grand a year, okay, but you really only get 82, don't tell me what you get after all your, deposited into your bank account.
My next question is, how does a bank qualify the income that they're going to use for your pre-approval?
So a lot of people don't know this. Banks, if you're an employee, not self-employed. Self-employed is a whole different realm. If you're an employee, the bank takes your gross income, your income before your tax deductions, before your insurance deductions. So, we basically will take your salary. So if you make 100 grand a year, okay, but you really only get 82, don't tell me what you get after all your, deposited into your bank account. Tell me your salary. Tell me what you make, because we're going to average that or take your salary without, factoring taxes. If you are tipped, we're going to generally do average of, anytime you have variables in your income, like tips, overtime, or if you're just not a full-time employee, we're going to average your income over 12 to 24 months. And just look at it that way. There is some common sense in there. Let's say, Mike, you're a wage earner, and this year you got a raise, significant raise, not reflect what you really make. So if you got a raise this year, we're going to factor that in. At the same time, you have to know that if your income's variable, there will be some kind of average.
What if I had a letter stating that on this date, October 1st, 2025, my new wage is this amount of money? Can you use that whole raise?
Yes. Now your employee's going to have to specify your hours. And if you have a pay stub to back that up, before closing, that really helps. But, any future income letter will work on a, conventional loan. A government loan like an FHA or VA, they're going to want to see generally 30 days to back up whatever letter that is. So there's some leeway there.